Welcome back, team. Today I'm going to talk you through how I made 8% or $8,000 on Bitcoin from my sickbed. Even though I missed out on 2 of the 3 entries that I had planned, the first position held for a lovely AR, which if we're trading at 1% per trade on a $100,000 account, has turned us around $8,000, which is, an incredible result for the weekend. Unfortunately, somehow I'm ill again. I think I'm putting it down to maybe the change of seasons or something like that, as this is twice now in a month, so I'm feeling pretty rubbish. Still, I always kind of keep an eye on the charts of the weekend. I always keep an eye on Bitcoin, and I saw this trade appearing, and I want to talk you through exactly how I took it. I was in bed at the time, just using my phone as well, whilst sat watching Netflix, I think it was. Worst of it was, had we caught the 2 other positions, this one and this one, we would have turned around something silly like, I think that one was a 16R, and that one was a 12R, so it would have been about 30, nearly 40R in total. So yeah, it would have been a really, really good weekend, potentially. But look, we still caught the main one, which is most important. We made some profit, and that's all that's matter. Now, I'm going to talk through exactly what I was looking for, what 4 keys I wanted to see to unlock the trade, and why I ultimately pulled the trigger, and then what 2 keys kept me in the trade and why I knew it was going to drop further. Now, if you haven't done so already, please make sure you're subscribed to the channel, you like and comment below, and pop that notification bell so you can be notified when the next video lands. So let's get into it. So this is the trade. This is where we took the trade from this supply zone, and ultimately we ended up down in this demand zone here. We closed at the start of the zone and ended up on just under 8R, which, like I said, trade at 1% per trade on a $100,000 account gives us a lovely 8K profit. What I'm going to do, I'm going to clear my charts. I'm going to hide all this stuff, and I'm going to talk you through how I took the trade and what I was looking for. So number one, we need to be in line with higher time frame trend. I always like to trade in line with, something like the 4-hour or the 2-hour timeline, ideally. So although we have had this major breaker structure here, this, if you remember, was a push up, and then we had this news related event which kind of took us back in. So yes, we had this major breaker structure here, but all it was really doing is continuing the major downtrend, which, as we can clearly see, is down. So I'm pretty happy selling this marketplace. Okay. What we're looking for is a breaker structure to indicate to us that we're going to be pushing down further. And we found this here. Okay. So let me just get my tools up. We found our breaker structure. Let me just get my eyes straight. I think it was that one. Yeah. Okay. So we found our breaker structure here. Now look, we could have had a better breaker structure, but all the elements that we needed were there. We had a push down impulsively, which took out these lows here. Okay, we then continued to push down, and we have multiple breaks of structure. So this indicated to me that this area here, this area of supply, was a good one for us to look at. Okay, new breaker structure indicated that the downtrend is in full effect, and the supply zone could have been drawn one of a couple of ways, really. Okay, this is the first one. Okay, nice and tight. Okay, and a lot of people would draw their supply zones like that. There's nothing wrong with that at all. Personally, if I see a supply zone like this, I like to draw the entire zone. So I'm looking at literally the last up candle, which would be this one and this one, as you can see there, last up candle before the down move, and then I frame just above the imbalance. So if you can see that there, the imbalance candle starts here. That's our imbalance area. I'm just going to draw it out for you. Okay, to give you a point of reference, that's our imbalance area, and that's our last up move before our down. Did we have a raid? Yeah, we did have a raid there. Let's push up here, raided these. Yeah, look, again, we could have had a slightly better raid, admittedly, okay, but you're not always going to get these perfect moves all the time, okay? And everything else was there. The push down, the imbalance, the breaker structure, so I was happy to look for trades from this. So that's keys number 1 and 2, higher time frame downtrend and a new breaker structure. Okay, we have both of those. Now, key number 3 to really kind of unlock this trade is the imbalance and the liquidity traps. So we want reason, we want cause for price to return to where it was. And they do this by these. Firstly, we have the imbalance. Now, we all know with imbalances, these are areas where price is ultimately magnetized to. This was the area, I think, on the higher time frame. As you can see, it has been whipped into on the lower time frame, but it's still valid there on the higher time frame. Let's just drop down to one of our trading time frames. Let's go down to the 15-minute. So our imbalance is this whole part here, as you can see. Okay. Now, what we have below this, we have a liquidity trap. What happens here is people expect price is going to continue to move down. So they sell there, they sell there, they sell there, they add in their sells, they keep adding in their sells, and they place their stops above these points. Okay, now for smart traders like us, people who are in line with strong money, we know that the bulk of the orders is in this area here. Okay, this is where the orders are, and if we want to be trading this, we want to be trading something like 50% of the last, the very last up move. So anything like this would be a good area for us to trade from. So for me, when I see this and I see these kind of inducements here, we see these liquidity points with an imbalance above. For me, that's not a reason to sell. That's a reason for me to wait. So what I did is I marked these on. Okay, I saw what was happening in the marketplace and I waited for price to come into it. Now we tagged the zone. Okay, and some of you may have taken this trade here, but to me there was no kind of exchanging of hands. It was just literally a wick in and a wick out. And if you had taken that trade with a stop just above there, you may have been okay, but you may have also been stopped out. For me, I'm trading the entire supply zone, and if I want to see a trade, a valid trade from here, I need 50% of the zone taken. Okay, which is what this gave us here. Okay, so for me, because we didn't get a really nice clean exchanging of hands here, what instead I'm looking for to take any kind of entry, that's what I would have wanted to see. We didn't get that. So for me, I'm waiting for 50% of the zone to be tagged, and then I can take a risk entry. And we had 50% of the zone here tagged. We took a risk entry like this. I think it was something like that with a stop at the top. When we've got these kind of wick stops like this, I'm happy to place quite a tight stop because realistically price shouldn't go much above here. These areas here, price, this is the supply here technically, but we have also got supply there. So what I do to be on the safe side is I place a little bit of wriggle room, but I'm happy to place it quite tight. If this was a really clean supply zone, I would place a wider stop, but because it's not clean and these are just wicks, I place them quite tight. And then that was the trade. That was the trade set. Now, so when we get to 2R, that's when we set to break even. It's a pretty clean push down. Everything's moving in the right way. We go to break even to this breaker structure here. And then this is when I'm looking for, additional entries. So there's various areas here we could have taken additional entries from. There's one here. There's one here. And I did have a couple of limit orders set there. Hoping that I would get into it. I think there was one there, potentially there was one there as well. There was multiple areas here where you could have entered this trade once again. Unfortunately, price was on a massive down and it didn't give us any entries, which is sometimes how it goes, but we're okay because we're caught up in the top one. The only one that I was a little bit gutted about missing was this one here, and I'll explain to you why. Now, for me, there were two things that I expected price to go further down on. Firstly, the areas of supply that were created. That shows us that there's strong money in the marketplace. This shows us that there's cause to drop down further. That's one reason why I'm expecting further prices when we see these big impulsive moves. We know that the strong money is heavily on the sell side. Number 6 was this weak zone here. Now, this is a demand zone, okay, which I mark up. I always mark up any kind of demand zones that are worth paying attention to. But it is a weak zone. And the reason why it's weak is the move up didn't break any structural points up here. If that move up had pushed up past here, it would have changed the bias. The fact that it didn't means that this is still a sell market, okay? This is an area here where we might see some sort of consolidation, and often we might see a little push up from it. I did expect this. This is the one I'm gutted about, really, because this would have taken us down to a lovely kind of 15R. But again, this one didn't trigger, sadly. So I was expecting a push up at least and then a push down, but the sell bias was just so heavy on this marketplace. As you can see, it did stop price, but then was ultimately broken. It's really good to differentiate between the strong zones like this, which break structure to the left, and weak zones like this that do not break any major points. And you could argue that this is a breaker structure. Well, yes, it is, but on a lower time frame. What we're looking for to either continue a trend is a swing point to be broken, like these are swing points. For us to see that this market is going to go bullish, and push up higher, we want to see that these major swing points, so these major supplies that we're trading from, you know, you probably wouldn't have traded that supply because it's not really a major supply. I wouldn't class that as a major supply. It's a minor move with a minor push down. This, however, and look, there's no imbalances in there either. So that's not a supply zone that I'd be looking at. This, however, is a supply zone. So although technically this is a breaker structure, yes, it is. Okay, that's not a major breaker structure. This would be a major breaker structure. This is what we're paying attention to for changes in direction. So we expected the zone to break, which it did. And ultimately, we just held the trade until we got down and we took off. Oh, it's a bit of a tighter entry. I must have got a wider entry, something like that, because we took off about 8R. I think it must have been somewhere around there because it was just under 8R. So it must have been something like this. Okay, around 8R, which, you know, like I said, 8% on a 100K account is, you know, 8 grand. So, you know, fantastic weekend, especially as I wasn't really out of bed this weekend. It's a great start to the week and happy with my profits. Didn't really want to hold it much longer. And as you can see, I would have eaten into 60% of that anyway. So, you know, great result. Now, this is only one piece of the puzzle, guys. If you want to find out how you can truly accelerate your progress and understanding in Forex and potentially 10 times your profits and results, make sure you click on these next videos that are coming up, and I'll show you exactly how to do this over and over again, day in, day out.